This is TradeFlow News, bringing you relevant news and insights from around the world. TradeFlow News, enabling trade for SMEs and economies worldwide.
These are some of the key topics that we will be looking into in today's program.
First, let's take a look at the overnight headlines which are impacting the commodity markets.
Oil prices fell on Monday as concerns about fuel demand in the top global oil consumers, the United States and China, offset bullish sentiment about tightening supplies from OPEC Plus cuts and a resumption in U.S. buying for reserves. Brent crude futures fell 26 cents, or 0.35%, to $73.91 a barrel by 0638 GMT, while U.S. West Texas Intermediate crude was at $69.34 a barrel, down 20 cents, or 0.29%. Last week, both benchmarks fell for a fourth consecutive week, the longest streak of weekly declines since September 2022, over concerns the United States could enter a recession on significant risk of a historic default within the first 2 weeks of June.
Global commercial oil inventories were close to their long-term seasonal average at the end of the first quarter of 2023 following massive releases from the U.S. Strategic Petroleum Reserve, SPR, over the previous 12 months. In the countries of the Organization for Economic Cooperation and Development, OECD, commercial stocks of crude and refined products stood at 2,804 million barrels at the end of March. Commercial petroleum inventories had increased by 200 million barrels compared with the same month a year earlier, but over the same time the US SPR was depleted by 195 million barrels.
Moving on to the top news in the energy sector.
Leaders of the Group of Seven, G7, nations plan to tighten sanctions on Russia at their summit in Japan this week, with steps aimed at energy and exports aiding Moscow's war effort, said officials with direct knowledge of the discussions. New measures announced by the leaders during the May 19-21 meetings will target sanctions evasion involving third countries, and seek to undermine Russia's future energy production and curb trade that supports Russia's military, the People said. Separately, US officials also expect G7 members will agree to adjust their approach to sanctions so that, at least for certain categories of goods, all exports are automatically banned unless they are on a list of approved items.
German energy firms CFE and Uniper have awarded some traders millions of dollars in bonuses for 2022, four sources familiar with the matter said, just months after the companies were rescued with multi-billion bailouts as Russia halted gas supplies. Germany has so far provided around 26 billion euros, $28.6 billion, in equity injections and loans to CFE and Uniper after they incurred record losses purchasing natural gas cargoes at record prices to replace lost supply from Russia, Germany's top gas supplier before the invasion of Ukraine. While paying bonuses at bailed-out energy groups raises questions around the use of taxpayers' money, it also highlights the need for the companies to remain competitive. Next, we have the top news in metal markets. China is likely to import more refined copper later this year as metal inventories in the country will gradually fall, a senior analyst at trading house Trafigura said. China, traditionally a large net importer of copper, brought in 746,692 tons of refined copper in the first quarter, down 12.6% year-on-year and the lowest first-quarter import level since at least 2015. Chinese customs data showed, sparking weak demand concern. Copper imports into China usually correlate with how open the import arbitrage window is, which has been mostly closed this year. Arbitrage involves selling and buying metal across different locations, taking advantage of the price difference between the areas to make a profit.
Gold prices rose on Monday as the U.S. debt ceiling stalemate and concerns over an economic slowdown steered some traders towards the safe haven metal. Spot gold was up 0.4% at $22,018.76 per ounce by 0727 GMT, after falling for 3 sessions. U.S. gold futures rose 0.2% to $2,023.60. Recent downside surprises in U.S. economic data have lifted the chances of a recession over the next 12 months, with safe haven flows providing somewhat of a cushion for gold, said Yeep Jun Rong, a market analyst at IG.
We will now look at the top news in the agricultural sector.
Chicago soybean futures lost ground on Monday, while corn prices were little changed, with both markets weighed down by a U.S. government forecast for all-time high production. Winter wheat climbed almost 1%, adding to last session's strong gains as expectations of crop losses in the drought-stricken U.S. plains underpinned prices. The USDA monthly supply-demand report on Friday presented the first look at the 2023-24 season, and it was bearish for corn and soybeans, commodities research firm Hightower said in a report. Big ending stocks are anticipated if the weather is normal. That is all for today's news on commodity markets. Stay tuned to TradeFlow News as we continue to provide you with more updates. We also invite you to follow us on Twitter at TradeFlow News, which allows you to watch our program on your mobile device or desktop to receive information from there.